Sorry about that. Yeah, no audio. Audio's fixed. Sorry about that. I muted my microphone. Okay, yeah, sorry about that, guys. It seems that for some reason, YouTube just killed me right there. I have no idea actually what went wrong there. Nothing went wrong on my end, but great to start off the day really strong with a lot of good viewers and then just exit scam. Okay, great. Anyways, moving right along. Where were we? We were talking about Bitcoin's price. Tuesdays, huh? Never got the hang of Tuesdays, man. All right, guys. All right, so just trucking right along, guys. There's too much happening right now. YouTube will not shut us down. Twitch will not shut us down. Restream shall not shut us down. We stand strong, united against the market as one. Okay, so anyways, I don't want to speak out of turn, right? I don't want to call this as, obviously a significant breakdown or break up of this consolidation period that we've had. It is still early for that. We are actually trading right into a supply zone, the exact same supply zone that has buoyed price up. Obviously, we know about the dynamics of supply and demand. The more times an area of supply is tested, the weaker it becomes. And this is going to be about the fifth test. We can see initial test here, here, and here. So that is 4 tests in total. This is going to be the 5th test with the most significant lower high and an extended period of consolidation and price contraction, very similar to what we saw both over here when we talked about Watertower explosion, looking at the amount of time that price spends below the dead zone, very similar to what we saw back in late February to late March when we saw the contraction before the large expansion up to Bitcoin's 2019 high. And obviously the contraction that we saw back through September to November of 2018 before the large movement to the downside when we saw the $6,000 to $3,000 drop. This is why I always get excited for large trending movements after a period of extended contraction of price volatility. And this is why volatility and understanding its dynamics are extremely important for catching these very long trends. It's a very different setup. It's a very different concept for most traders to look at than what most people consider as trading, which is where you have lower time frames open and you are taking reversion to the mean trades, or you are taking micro trend following trades, or you're just more of an active trader, right? You're utilizing the 15-minute chart, the 1-hour chart, the 4-hour chart. That's the 4-hour chart's not bad for trend following, but when we're looking at larger time frames, the daily, the weekly, not really the monthly. The monthly is not really tradable. The weekly is also difficult to trade as well. The daily is absolutely tradable. In fact, I think it's the best time frame to trade, especially for newer traders, even for experienced traders. And then what you can do is you can build that as your base, because it is quite simple, in my opinion, at least the way that I do it, or the way that I've been doing it, to build a consistently profitable strategy on such a time frame, on a highly liquid asset. And then you can go down to lower time frames if you want to optimize further strategies. This is so typically the way that I've seen this work with my students and with my own self is building that manual daily strategy out. And then eventually you tend to move more toward the realm of automation, and you begin building out automated systems on lower time frames, or at least more active systems. And not necessarily that you're writing your own bot or your own script. We've got multiple platforms available to facilitate that automated trading for you. That isn't as complicated and advanced as most people might think that it is. It's actually quite not. So anyways, Bitcoin's price, as we sit from a technical perspective, we've had an expanded period of contracted volatility were evidenced by a Watertower explosion below the dead zone. We are trading below the baseline. We have minks below the signal line and below the zero line, the initiation level. And we also have Fisher Transform oversold. Now, looking at Fisher Transform, I'm not spotting any convincing signs of any kind of divergence. In fact, all we're seeing on Fisher Transform is successive lower lows. This is not divergence. You do have to go from your most recent low. As I pointed out in my Trading Crypto 101 divergence video, you have to have rules when you trade divergence. Those are the rules for divergence. Minks can also be used to spot divergence. However, now I do want to point something out. If we take Minks back and look at Minks, when Minks does get to this oversold level, we do typically see a reversal. However, we need to couch that. We need to couch that with the overall market condition, and the overall market condition is coming very close. It's not just the I hesitate to just rely or reference this, which is the pattern, the contraction pattern that everybody has been looking at and watching. Obviously, we're coming very close to a resolution of this area, even though we've talked about the directional bias that can be generated. There's nothing wrong with using trend lines for ranges if you're going to range trade. But the problem is for building a trading system out, right? If you want something that works all the time, is that those ranges are often unpredictable and they very rarely work very cleanly like they are now. So just because you see something that has that is working good now, you need to look and see how well it works historically and how reliable it is to use moving forward. However, we've referenced this because it is a good indication of Bitcoin's price range, and this is also going to be a good indication for what the rest of the market is going to do. It is a good leading indicator, potentially, for how the market will likely react to certain areas. But what does this let us know? It lets us know that there are several hotspots of manipulation, and we are in one right now. We're at an area, we're at a supply zone, or excuse me, we're at a demand zone. This is an area where price has bounced multiple times in the past. You have the supportive trend line. And, common wisdom would tell you that breaking down from this trend line would be an extremely bearish movement, and it would. However, you do have to wait for closes, right? This is why people watching on lower time frames, I think, have a higher probability to be faked out by movements, because they're going to be trying to, if you are looking to buy in this level, if you are looking to buy in this area, right, then there's really nothing there's really nothing to tell you, because you are attempting to buy supply, or you are attempting to buy demand. And while that is not the way that I trade, I do understand that concept, and I cannot say anything negative about it. You're going to have to take your risks. You're going to have to take your chances. And the main risk here is going to be large wicks to the downside. If this is going to be some kind of stop loss hunt or fake out movement, and you want to be prepared for that. Now, even though that is a phenomenon that occurs quite commonly in cryptocurrency, we cannot dispel, or I cannot argue away the notion that this has been a successful area to buy in the past. The only reason I would be more cautious, not only is this not the way that I trade, but I would also be very concerned about the expanded period of low volatility. And then I would be worried about the fact that this level of demand has been tested multiple times, making it weaker and weaker and weaker. So I would be very cautious about that. I think the safest movement right now is if you are not in position, if you're not in an active trade, like we are in an active short and have been for about 4 days. So if you're not in an active position, then the safest thing for you to do is to hedge your account. I go over how to do this in my Trading Crypto 101 video on hedging and margin trading and short selling. It's not complicated to do. If you have long exposure to Bitcoin, you simply take out an equal amount of contracts short. This puts you at a cash basis. You could also obviously move into cash. I don't really like doing that. I prefer to utilize the leveraged exchange for what it is there for, and that is to hedge my account or to go short. You can do this on ByBit. You can do this on BitMEX. If you're going to do this on BitMEX, I do not recommend, if you're going to be using BitMEX, then you want to be using the futures contract and not the perpetual swap contract, because if you're going to be using BitMEX and you don't have to pay the funding fee, then why would you want to pay the funding fee? Because if price does descend bearishly, then you're going to be getting tinged for that. However, that does give you the security and the safety to wait, which I think is the best option. You want to wait for this area to resolve. Now, keep in mind, we're already getting valid short signals, but we do want to take the range into account. We're trading into a hot spot of manipulation. We're trading into a very highly contested area where we are going to see increased trading volume, and that trading volume is not necessarily predictive of which direction price will move. I'm bearish to the downside. It's very easy to be bearish to the downside when price is moving to the downside, but I am couching this in the fact that, yes, we're coming into a demand zone. We are coming into a demand zone. This is an area where prices bounce multiple times. It's a weaker area. I'm not buying the demand zone. I'm waiting to see how price resolves. And again, we'll get into some more specifics here in a second, but I just wanted to couch the overall area of where we are in price. However, let us assume the bearish bias, and let us assume the break of this area. Let us assume the break of this zone. Let us assume that we do break this demand zone, and let us assume that the short signal, which again was generated 4 days ago on the 20th, so you're 4 days past, so you're violating the 3-bar rule, so it's too late to enter now. You would need to be waiting for some breakdown setup. And what you would want to be looking for is a close, is a daily candle close below the level that you are tracking, whether it's that ascending trend line, whether it is a horizontal level, whether it is an order block. You're going to be wanting to wait for a candle close. There are a couple other methods as well, so let's actually go through those. I explained this in the premium webinar for premium members when I explained support and resistance. If you're looking to take a support and resistance style trade, then you would be looking for the close below. There are two ways to take this trade. Obviously, the breakdown trade where you get the candle close below, and then you can also set your limit orders to sell back at that area that was violated, the support or resistance level, and look for a BPC trade, a break, pullback, continuation, where price breaks below, backtracks very quickly and kicks off of that area and then descends to the downside. Often you're going to have to be watching slightly lower time frames to see that movement, if the movement is going to happen very rapidly on the daily, although that BPC phenomenon can occur on the daily time frame as well, where you get a close below, a couple days of weak retracement, and then actual follow through of the bearish movement. But again, at the end of the day, your own positions are going to be your own positions, and all I do is advise you to trade safely. Now, if we start to look at what I'm doing, if we start to look at a few more things of what I'm doing, so let's bring up a few more indicators. Again, let's see here. So the first thing I want to bring up is the volatility expander. This is going to be our ATR bands. I'm very, very close to being able to publish this for the premium members. Now, ATR band philosophy and strategy. This is going to be why I have updated my exit on BTC-USD. Now, we're not in trailing stop zone yet. Price has not moved far enough for me to justify putting on a trailing stop. I do have an objective level of when I place my trailing stops and where I place my trailing stops. So we're not there yet. We're not at trailing stop zone level yet. Do I have that on the chart? No, I don't have this on this chart. That must be on the Coinbase chart. So anyways, but we do have this lower band, this lower volatility band, and that band is currently sitting at 96.22. Now, if we do close back above 96.22, I will be exiting my position and taking the ATR band long. I will be targeting the $10,023 area. Right? It's going to be about a $400 move, and then I'll revisit my position at that point in time. I will most likely not remove my hedge. There are a couple other factors that I can look at that point in time, but most likely that will just be a cash-based long trade, i.e. I will still remain hedged. All my equity will still remain hedged, meaning I will only take partial long exposure by by only removing the portion from my hedge that I want to expose to the long side, okay? And so that will just be a movement from 96.22 to the $10,023 area. That's going to be our EMA 13, our original baseline. Other targets that we can target as well is going to be the $10,425 area, and that is going to be a reversal setup in and of itself, and I think that's the better way. You want to be waiting for a sign of bullishness. After a test of supply, you want to see, these are just objective levels. Most people are not going to trade with objective levels. They're just going to see price right around this area and they're going to want to buy. They're not going to have a clear idea of where they want to set their stop loss. They're not going to have a clear idea of when to enter and when to exit. And for me, it's quite simple. If we test a demand zone and then we close back above the lower band of ATR volatility, well, that can be a long trade. That's a reversion to the mean strategy. You take the trade above 96.23, 96.23.65 at this point in time, and you target your EMA 13 or whatever is your base, whatever is your base for your volatility bands. And they can be whatever you like. The volatility expander is adjustable. And again, I'm going to code all that nice, fancy, fun stuff in there because I just use it the way that I use it. And I like making the tools customizable for people. Above and beyond that, there's not a whole lot more here on the daily to talk about. Pretty concerning movement to the downside. The downside exposure is real. I don't see any support below us, to be quite honest with you. We can talk about a lot of people are going to be using their own levels of analysis. They're going to be using measured movements. They're going to be previous areas of support and resistance. But to be quite honest with you, I do not really see any significant level. There's nothing on this chart that stands out to me as a strong horizontal level of support and resistance. If we go over to the Bitstamp chart, I mean, really the only thing that stands out as a strong level of support and resistance to me is the previous floor of last year's bear market, right? And that's going to be coming in from all the way from 6,000 to 6,700. And that's about it. I mean, you can just, if you pull up VPVR, you can see the mass, you can see the swelling of volume around that area right there. That is the point of control on a higher time frame. In fact, if we take in just the recent market into account, so this is going to be, you can see here on this chart, I am plotting not only the, I see it's a little crowded over there on the right, but you can still see you can see this is the height of the 2017 bull market. This is the lows of the 2018-2019 bear market right here. And this is where we currently sit right here, kind of in no man's land, right in the middle of this range. And you can see that our point of control is resting down here at 6,403. And I don't really see any other significant area of support. We do have this area right here. We do have this high volume node coming in from 7,800 to 8,300. But again, and we do have a little bit of consolidation in that area. We do have a little bit of a fake out head and shoulders, as we can see here. We can see that left shoulder head, and then kind of a maybe. So it's like a head and a raised arm. You know what I'm saying? It's like a head and a raised arm. Which is just a failed head and shoulders pattern is what that is. A lot of people were attempting to trade that to the downside. They were looking for that more significant retest of the point of control of the floor of 2018. But that's the only really area that I see strong support. And again, when you have such vagary, right? That's vagary, right? That's not, I don't have a level that I can just throw out to you and say, I'm confident the price will reach this level. And nobody does. I don't like trading that way. I look to catch a trend and I ride that trend. And that is where I've placed my efforts. And I think that when most people get away from attempting to predict the future, when most people get away from having very concrete answers to every question, that there's not, because the reality is the market is inherently random, right? There is manipulation. The manipulation can be predicted to a certain extent and traded against. But as far as any human person on planet Earth being able to say that it's more likely the price goes to this area than to this area, I think is fairly silly. You can have differing levels of confidence. You can have confidence levels, which I think is the correct way to view the market, different levels of confidence, because everything comes down to statistics and probability. So probability that breaking this area, we do end up finding ourselves in this first high volume node between 8,400 and 8,000. Again, is likely. That does actually stretch down to about the 7,800, maybe $7,700 level, depending on how specific you want to get about it. But again, first area to be watching for a little bit of a break from the storm, and then 6,400 to, or excuse me, 6,000 to 6,400, with the actual point of control coming in at 6,403. Now, again, this is levels of analysis. This is methods of analysis that I haven't talked about in some time. But again, how else are you going to establish targets or long-range macro targets? Now, let's take a break from this and let's go look at the weekly for a little bit. I do want to look at the weekly. And on the weekly, we do have a level coming in the form of the weekly baseline. This is the 30-period Donchian, 87.75. Interestingly enough, if we bring up our EMAs as well, and just look at where our secondary baseline is sitting at, that secondary baseline is sitting at 77.80. Okay, so that secondary baseline, as well as, and I want to make sure that I quote it correctly, that is going to be the simple 100 period moving average on the weekly time frame. That is also coming in right around that $7,700 area. So that does have confluence with that initial high volume node on the VPVR. And interestingly enough, we also have the 30-period Donchian on the weekly time frame. Again, as I said, coming in at 87.75. We are touching base right now on the weekly 21 exponential moving average. That's our tertiary baseline on the weekly time frame. Baselines are different. Baselines are a different phenomenon. Baselines respond differently on the weekly time frame than they do on the daily, because we're looking for more macro trends. We're looking for more macro indication here, and we are slipping further and further into the realm of subjectivity when we do apply these methods of analysis. When we look on the daily time frame, or what our tradable time frame is, it's a very clear objective, if this then that strategy. So let's talk about some objective values here let's talk about some objective values that I've talked about before on the weekly here. This is going to be the 13 and 55 weekly exponential moving average crossover, which to me heralded in the bull market. That's exactly when I got extremely bullish on Bitcoin's price. It was right back here when we actually got the moving average crossover of the 13 and the 55. It was right back here. I talked about it on stream, and I was pretty much, I increased my long positional exposure at that point in time, right? Well, and we had a very good performance from there. Did we catch all of the movement? No, but this is a trending movement, and it was a very beautiful trade. Where are we at right now? On the weekly time frame, for the very first, obviously we got multiple weekly sell signals, but again, you cannot take sell signals when you are dealing in a very strong bullish trend, and so that entire weekly moving average crossover would have negated those sell signals to me. However, if we look at Minx, which is going to be our primary indicator, we can actually see that last week we did close underneath the zero line for the very first time. And for those using the original 13 EMA baseline, we are for the first time now with Minx giving a sell signal closing underneath that line for the first time. Also, Wada Atar Explosion closing above a falling explosion level because we're shifting from bullish to bearish momentum, closing above the explosion level. So all the signs are here for a bearish weekly setup. If we do look at Quadriga ATR on the weekly time frame and look at what Quadriga is telling us for our take profit targets, we're going to have to scroll up here just a little bit. We do have a first take profit target of 8160, followed by 6838 and 5500. Now, I'm more inclined to be okay with those first two take profit targets. I think those are realistic targets should we actually break down from this area and enter into a strong bearish trend. But again, every single level that we violate also increases that confidence. But again, seeing where the weekly 55 is coming in at and understanding that it will take a moving average crossover, of the 13 and the 55 to really seal the deal for the bull market and tell us that we are going to potentially see lows again or just drift in whichever way. Again, that moving average cross under is the delineation between truly bullish and truly bearish. We're quite a ways away from that. So it's really improper of me to be talking about what trend we're in. Overall, we're in a weak period of consolidation with successive lower highs, both on the daily and on the weekly, with a current level of supply that is held up in this $9,000 to $9,400 area, but we might be on the verge of seeing that break. Again, I am already short, and from a macro perspective, the first areas that I would have my eye on, of course, are 87.75, followed by 7,700, and then failing that all the way down to that $6,000 to $6,400 area, indicated by VPVR on the daily time frame. We also have a little bit of not a whole lot of confluence there with our 200 exponential moving average right there. So I digress. I think the important levels here on the weekly are going to be our weekly 55, are going to be our weekly 21, our weekly 13, and our weekly 30 period Donchian. Okay. And all of those levels are currently, our 13 is above us. We are currently on our 21. Our 30 lies below us at 87.75, and our 55 lies below us in that $7,700 area. And again, going back to the daily, we do have confluence with that $7,700 area and the VPVR giving us a good, I think a fairly good and clean objective level to be targeting for short targets. But again, I use Quadriga ATR for my short targets. Let's assume that one's taking a short now. What would your targets be? 9,077, 86.79, and 82.81. So that'd be putting you comfortably in that 87.75 pocket of the weekly 30 period Donchian. And it would kind of be allowing you to catch exposure for a more significant downside movement. Stop loss currently on the daily at 10,077. 10,068, right around that range. Now, what would I want to see? Again, I already talked about this. I talked about this first. What would I want to see to be taking a long trade? Again, I'll take the scalp long if we do close above 96.25. It's 96.24 right now. If we close the daily above there, I'll be looking to take that target up to 10,021 with an extended target of 10,419. But I won't necessarily be bullish at that point in time because it'll just be a reversal trade. It won't actually be a trending trade. So what does that mean? Practically, it means lower risk, lower exposure, smaller position size, and not removing my hedge because it will take price at this point in time above 10,134 for me to believe that we could actually see a movement to the upside out of this. But of course, that hope is not off the table. I know this is very negative, guys. I know this is kind of worrying. This is kind of scary, but here's the reality, okay? Bitcoin is a fundamentally strong asset. We lived through the 2018 bear market. I don't think that the fact that we put in a lower high is indicative of Bitcoin's future weakness. I think that it is more indicative of overall global weakness in the economy. We have no idea how Bitcoin as an asset will perform. My only advice, and this is to the hodlers and this is to the traders, is this, right? Do not blindly believe that because Bakkt is launching, that because the world is in turmoil, or because Arthur Hayes tweeted that Bitcoin is assuredly going to $20,000 this year, that any of those people care about your pocketbook. None of those people care about the family that you have to feed. None of those people care about the food that you have to put on the table. None of those people care about your personal finances and your personal money. Nobody cares about yourself more than you. You have your own responsibility to yourself and to the universe to be calm, to be rational, to make good decisions. I do not want anybody running off of this stream and making trading decisions based on what some dude on YouTube says, regardless of the fact of the background that I have, the company that I run, and what I do it myself as a professional trader. I do not have a crystal ball, and all I can tell you is what I'm doing in the market and give you the best advice. But here's my point, or the point that I hope you take away from this. Trade safely. We are in a hotbed of manipulation, an area where a lot of fake outs, a lot of liquidations are likely to occur. A lot of people are going to buy. The people that are buying at this point in time have a high propensity to get stopped out with stop loss hunts. So if you are a buyer at this level, just begin scaling in, all right? I'm not saying that price will not reverse from here and break to the upside. I'm saying that technically, statistically, that is the less likely setup. Looking at the overall structure of the market, the break to the downside is likely. Doesn't necessarily mean it's going to happen at this time. We still could see a movement up to capture liquidity at that $10,000 100 area. Basically clear out all short stops at this point in time before the movement down, because that is how the market typically likes to proceed. So just trade safely. Make yourself an objective, if this then that strategy that will be your guide and your bulwark in times of chaos and turbulence, so that you can trade safely and securely and with conviction. Because if you're not trading with conviction, then you are just in the realm of wishes and fishes and you don't know what you're doing. And a trip to the mental hospital is highly likely for you, because that is how most traders in their career, trading subjectively, ending up with more than analysis paralysis. I think it's actually psychologically debilitating to enter into the market and feel that you can have and think and believe, to be proud enough, to be haughty enough to think that you can predict the market and subjectively interpret price and just crush it. And 99% of people who attempt to do that, end up blowing out their account and end up walking down washout lane. And I don't want that to happen to you guys. And the way to counter that, the way that I've countered that, is objectively with an if this then that strategy. So that's what the indicators say. That's what the market says. I try to be very clean and objective with what I say all the time. So let me know what you guys think. So what we'll do right now is we'll also look at Ethereum real quick, and then we'll go to the live chat and chop it up for a little bit. We'll end up taking a break. We'll come back. We're going to look at the news, and we're going to look at Forex. Yeah. Brahm070, thank you so much for the subscription on YouTube, my good friend. All right, so let's go look over at Ethereum USD. And to be quite honest with you, man, we'll look at it on Finex. You know, Ethereum USD has its own interesting things that we could talk about, but the reality of the matter is we're not seeing a decoupling. You know, I talked actually on Friday night how Ethereum actually looked kind of strong. And it did actually look strong. It was a weak movement to the downside, even though we did get daily sell signals and Minx was pulling back. You know, I thought that WADA had a chance to hold in there. We still had a rising explosion level, but we did see that trend flip, and we're seeing that trend flip now. In fact, we do have, let's actually pull up WADA and see if we do. We damn near have a confirmed daily sell signal on Ethereum USD itself. We have Minx crossing below the zero line. We have Fisher transform bearish as well. And we have Wadatar explosion printing a red column above the dead zone, not yet above the explosion level. We kind of want to be careful taking the initial trade out. I do prefer to see the little bit of the retracement and then the continuation. Bitcoin Allen, thanks so much for joining us over there on YouTube as well, my friend. So, you know, I'd be a little cautious about taking the short exposure on Ethereum at this point in time. I've already got a very, very good entry. I'm up about 20% on my EOS trade, my short on EOS. And less, the numbers are less, but again, I'd say that the profits are actually just about as equal. Let me actually just pull it up over here. Sorry. Yeah, up about 7% on my Bitcoin trade as well right now to the downside. So, you know, I want to be very, very cautious with applying any new exposure and any new risk. Again, hotbed of manipulation, hot area of the market right now. You really don't want to be trading in the hot areas of the market. I go over this at length in the Pathways to Profit course, which is exactly how and why I trade. So just be safe out there, guys. Be safe. But anyways, looking at Ethereum, we are closing below the daily baseline. And again, Minx is showing a short signal. It's a primary short signal, and Wadatar explosion is showing a short signal as well. So this is going to be a short trade. And if one was taking this setup, which again, normally I would do, but because of the way that I have all my accounts set up and hedged basically at zero risk right now, or more to the downside exposure, we'd be looking at targets of 178.35, 167.22, and 156.10 with a stop at 206.15. Early exit would be a close above 194.46 at this point in time, or should our indicators turn against us. Excuse me. Let's go ahead and look at our volatility expander. Volatility expander would have given you the short entry right here on the 21st. Price is above the upper band, the upper volatility band. We close back inside of it. That is a reversion to the mean setup, where you are targeting your your baseline. Now we've hit the furthest target of that. We've actually hit the lowest ATR band. So that reversal short, one would want to be closing at this point in time. One would want to be closing right now because the lower band of ATR was 189.47 and price is currently sitting at 189.45. So that's about it for that. And again, Ethereum doesn't look fantastic to me, but I'd rather sit on the sidelines instead of taking. There's no reason to open up an Ethereum short. Unless one is, so if one is holding a lot of Ethereum, again, hedging is always the safest bet if one doesn't know the future direction of the market. Looking at Ethereum here, I would say that a bounce is likely. We are retesting a previous supply zone that we are looking to SR flip into a demand zone. So I would not be surprised at a bit of a bounce here. Looking over at the lower time frames, obviously on Bitcoin, with the exception of EOS, actually, we are seeing some significant lowered momentum to the downside. Let's just go look at that so you guys can see. If we look at BTC USD, we can go to Bitstamp, and if we go to the hourly chart, we can see this momentum start to tail off. Now, again, this actually doesn't look really, really good. It can be exactly what it looks like before I move into the upside to grab some short side liquidity. But again, I think that the safest thing is, rather than trying to play the bounce, is to just stay short, expect a little bit of a retracement, and just be cautious right now. This is not an area where I'd be looking to load up. This is not. And I know that, I say that a lot because it's not the way that I trade, and then price bounces, and then people are like, why wouldn't you just take that reversal? It's not the way that I trade, and just because it's worked for the last few months does not mean it works very well historically in Bitcoin's price, which is one of the strongest trending assets of all time. So again, I don't think that reversal trades, I've talked about reversion of the mean trades, which I'm okay with. That was my bread and butter back in the day. But as far as reversal trades in Bitcoin, I don't think that is a very logical strategy most of the time. The reason why is because Bitcoin is a trending asset. That is where the money is to be made. And when people are trading reversals, it's when there's not a trend to take. You make so much money when Bitcoin trends that people who are people feel a need to overtrade. It is actually a natural human phenomenon. It's very natural to newer traders. They feel the necessity to overtrade when Bitcoin is sideways. And when Bitcoin is sideways, it is, and this is coming from somebody who's traded many markets, it is one of the, and I don't care what people say, it is one of the most unattractive assets to trade, period. Right? This is when everybody gets debilitated. This is when everybody gives back their gains. This is when everybody gets chopped up, liquidated, stopped out all the time. And I know there's going to be about 15, 20 dudes who are like, no, Justin, you're just not trading right. I've got this killer strategy that works absolutely well in chop. Congratulations for you, man. Most people aren't. And I know for a fact from the students that I mentor, when Bitcoin's price moves sideways, this is when people get absolutely annihilated, to a degree that they do not get annihilated trading stocks or trading Forex, in my experience. And this is why I also trade Forex, and I recommend that people trade Forex as well, or at least consider it, right? There are times when Bitcoin's very difficult to trade. And here's the thing, you make so much money from Bitcoin when it trends. Why would you just not wait for a trend? Okay. Thoughts, right? There are other ways to trade. I know guys that are extremely successful trading reversals on Bitcoin, but they're very rare. They're very few and far between. And for every person I meet that's worked out a great automated system, and they're pretty much all automated, good reversal strategies. For everybody that's worked out a good automated system, I meet 9 guys who have been liquidated trying to trade and chop. So, thoughts? Just think about it. I'm not saying I'm right, just giving you my opinion. Okay, let's pull back up a chat. All right, do I have a chipmunk working that keyboard for you? I've never seen anything that quick since the 1950s report typing World Series. It's a mechanical keyboard, and you know what I'm saying? Wally, quotable quotables. Just because it worked in the past doesn't mean it worked historically. You got me, man. You got me. Thank you for your sharp ear. And I hope you know what I mean. Just because something has worked in the recent past doesn't mean it's very reliable on a longer historical basis, is what I mean to say. That's a good one, though. What, Yagami? What's going on, man? Yeah, you see the way my account's set up, man. I got a checking and a savings. Automated for the win. Bot level 8. Learn, earn, and don't get burned. Thank you so much for the $10, my good friend. Highly appreciate the support as always. Shout out to you and Gunbot University, my friend. Make sure to go check them out. Thank you so much, my man. All right, let's see here. Weekly 21 EMA holding, but here's the thing. The weekly 20, we don't have a weekly close yet, so we need a weekly close to see if it's going to hold. Do I take Adderall to stay focused, or am I just Superman? Thank you for all you do. I've been watching you quietly for over a year, and I'm still learning. Thank you so much, I Newton. No, I don't use any substances. And Adderall, Adderall, I think maybe some people in my... here's the thing, man. Drug use among traders is pretty rampant, unfortunately. And that's a topic I haven't talked a whole lot about, but, so I'm all for, sorry to have a segue, guys. I'll keep it quick, but, I'm a libertarian. I'm an ANCAP. And so I truly believe that there is no moral right to outlawing drugs. I don't really care to hear the moral argument. I think that is a community and society-based issue and not a legislative issue. I do not think that drugs should be criminalized. All you do is create a black market. All you do is empower gangs. All you do is empower the illegal trade market. And all you do is put a lot of nonviolent drug offenders in prison. And that's very near and dear to my heart. So, but I also think that drug use is also not necessarily a good thing. I don't think that just because you can do something, and I think that you should have the right to do drugs. I think if you're not hurting, because we already have laws on assault. People are like, well, if people use drugs, they'll hurt people. No, we already have laws on assault, rape, crime, theft. We already have laws on that. So if somebody's juiced up and does that, well, then whatever, they just get arrested. Maybe I'd be okay with like a more punitive law that says, maybe the charge is doubled if you happen to be on drugs. I don't know. Maybe there's probably arguments against that because people who suffer from drug abuse tend to have issues. And we can have the argument of whether punitive effects are effective or not. But again, I think at the end of the day, there are some punitive effects are good. Rehabilitation seems to have a mixed bag as to how well it works. I don't know. Works well for some people, works terribly for others. And I would say that works worse for most people. I don't know. But anyways, my point is, the point I'm trying to make to you guys, all that really matters beyond my thoughts about drugs is, a lot of traders are going to, have impulse control. A lot of newer traders too. So they're going to drink a lot or maybe smoke weed. And I don't have any problem with smoking weed. I don't smoke weed, but whatever. I don't think it really makes you a better trader, but some people would argue that it does. I think that people feel that they're going to need an edge in the market. And just as somebody who's done this for a long time and been clean, hasn't used substances for a long time, the best edge is being sharp and sober, guys. It really is. So, don't dull your senses. I think that you'll have a better life, and I think that you'll have more success if you stay sharp and focused, man. A good night of sleep, good exercise, plenty of water, some buttered coffee, the keto diet, intermediate fasting from 1 to 9, and you're good to go, man. Life's golden. Alfred Acosta, what's up, man? Good to see you in here. I have some white pat. Oh, shit. Okay. Prescription drugs don't want competition. Have I looked at that guy using fib rings? He uses them in a completely different way than you are supposed to, but he is really good at anticipating breakouts. No, that's cool, man. No, I haven't seen it. Thank you, Danny. Highly appreciated. Nah, bro. Trading on lewds all day. Don't tell me that cracking name does not come from substances. You guys are funny. Okay, listen. XRP holders use meth. I think that I think if anything, they would want to be using like ecstasy or something, man. You gotta have some artificial happiness somewhere. Quadmigo is the Spanish version of Quadrigo. I'm all in, baby. Let's short this bitch. Yeah, Jack, that's an interesting, that is an interesting point. And we'll talk about that. Maybe that's good to dovetail when we talk about Backtern a little bit. But the narrative of 2019 has been, oh man, look, let's just zoom out this daily chart. Here's the narrative that we've been fed, right? Look at this area, guys. Look at this area right here. Bitcoin fell from 6K to 3K and then skyrocketed to 13K. And you know what that means. Institutions filled their bags down at 3K. That means institutions are long on Bitcoin. We're going to the fucking moon. See you there. Boots are on. Right? And that's the narrative that a lot of the people are out there actively selling on Bitcoin right now, right? And if we think about that for a little bit, there's very little nuance in there. People just, people don't just buy and hold forever. Most people don't, right? Most people buy and then sell at some point in time. And, this is what the market looks like when people are buying and other people are trying to sell, but there's more buyers. And this is kind of what the market looks like when a lot of people are trying to sell and some people are still trying to buy, but there's more sellers than buyers, right? Accumulation and distribution. So yeah, you bring up a great point, man. We've got a very wide, uncertain economic situation, especially with this repo lending, and potentially institutions that might have taken some risk on exposure in Bitcoin. Significant numbers to us, fairly insignificant numbers to them, but they're feeling the pinch of the economic contraction that's incoming potentially, and they're deciding to offload their highest risk assets, and that would be Bitcoin. So who's to say we're not seeing, hey guys, maybe the dream's dead. Maybe we're going to moon eventually, right? I'll believe. I'm not on the moon right now, but I'm on the moon at some point in the future train. That's why I'm a Bitcoin investor. I'll always buy Bitcoin. I'll continue to accumulate Bitcoin. Bitcoin go to $1,000, I'd buy some more Bitcoin. Because I think that Bitcoin has long-term belief. And even if, here's the thing, and this is maybe my edge as a Bitcoin investor, right? Not only am I diversified, I hold stocks, I hold foreign currencies, I hold precious metals, I have real estate. But the reality is, my faith, my belief in Bitcoin stretches generations. I see Bitcoin or whatever comes out of it as a multi-generational effort to improve society, right? To improve society's monetary policy. So I'm confident, even if Bitcoin doesn't yield any significant, it already has. Bitcoin's already done fantastically well for me as a wealth asset. But even if it doesn't go to moon in my lifetime, and I'm young, but let's say it doesn't, right? Can you guys accept that possibility that Bitcoin does not go above $20,000 for the next 50 years? Have you even considered that possibility? There's no reason it has to, right? There's no reason it has to. It doesn't matter how valuable it is. Valuation is not based on intrinsic value. Valuation is based on speculation and belief. Okay, it's also based on nation states. It's based on politics. It's based on love and lust and what's in the box office right now and how fat is Miley Cyrus getting and all these kind of things that have nothing to do with intrinsic value. That's why the market is chaotic. That's why every moment in the market is unique, because you would think that the market is rational. The market is not rational. The market is not right all the time. If the market was right all the time, price wouldn't change every second, right? The market is never right. And everybody that's sitting down in front of the terminal determining price with their clicks of buttons are not just thinking about price, not just thinking about the budget sheet, not just thinking about the valuation or the intrinsic value. Why did I mention all that other nonsensical stuff in the first place? Because when you sit down to trade Bitcoin or buy Bitcoin or invest in Bitcoin, same as all these other people that are doing it, which all of that collaborative effort forms the price. When you're sitting down at your computer, are you just thinking about the price of Bitcoin? Are you just thinking about its intrinsic value? Are you just thinking about, all the fundamentals? No, you're thinking about this. Plus, damn, what am I going to eat for dinner last night? My wife was bitching at me yesterday. I got to pick up my kids at 4 p.m. How fat is Miley Cyrus getting right now? I haven't seen her in a while. You're thinking about all these things and it sounds crazy, but all of that psychology gets tied up into the valuation of Bitcoin's price, believe it or not. Or not being believe it or not. I'm being kind of funny, but what would I say is a good starting amount of money to begin trading with, like for a beginner to start figuring stuff out? $0, actually. I think that most traders should be starting with backtesting. That's exactly how I teach in my course. and this is going to be controversial, but I'm just telling you my honest experience as a trader and as somebody that's educated many people. Invest in an education first, right? Invest in an education first, because trading is a skill. It's a learned skill. You need time in the market. You need experience, and you need to learn from somebody who knows what they're talking about, right? So wherever you go to get your education, invest in an education. Doesn't matter whether you invest money, which you can get, depends on where you go, or you can invest time. But develop a trading system, back test it, make sure it works good. And then I would paper trade it in real time with $0, paper trade it, or real time trade it with like $100. You can trade with $100 in cryptocurrency. And then if that's successful for you, then, and you've got your actual statistics and it looks good, start, scaling in more money. $1,000 here, a couple months go by, $1,000 more dollars, couple more, because you're the way that I trade and the way that I teach people is you're building a system that's going to work for the rest of your life, right? You're going to do this for the rest of your life. Start off on the right foot, train properly, go through the steps, become confident, obtain conviction, and then start putting your money at risk. We've got a whole realm of back testing to do. But if you've kind of done all that, if you're looking for a good amount of capital, I think $5,000 is a good number. But again, you can do a lot of damage with $5,000 in cryptocurrency. More realistically, you're going to need to work yourself up to the upper fives or about six figures. I think that's what most full-time traders operate with, right? About $100,000, right? In cryptocurrency, you have the ability to build yourself up to that fairly rapidly because you can pull 25, 30% a month. You can. If I would enter now, what is the best entry for a short? I wouldn't actually recommend shorting right now. If you were going to take a full risk short position, again, we're 4 bars past the confirmation. I can't not in good conscience recommend you enter into a short. So the only short that I could recommend or talk about is going to be the breakdown short. I don't really have a good level. Most likely you would want to be entering on a close below probably these daily candle closes. So below 9,400, you want to be entering on a close below 9,400. You want to see the daily close below 9,400. You might even want to be watching something like the 1 hour or the 2 hour for a little bit of a back test that $9,400 area and maybe try to enter with a limit order at that area. But the way that I do things is I just wait for the signal and I market enter. The signal came 4 days ago on the close of the 19th, the opening of the 20th candle. And so yeah, I would not actually recommend entering into a position now. As I said, the only thing I would recommend right now is hedging and waiting for that breakdown movement. Have I heard of Bean Cash? I have not. Greetings from Germany. Hallo, wie geht's es Ihnen? Any thoughts on quantum computing's potential effect on crypto? I talked about this quite a lot. I don't actually think that quantum computing is a major threat to cryptocurrency. Funny enough, people have published Medium articles about my opinions on quantum computing. And I think that's kind of silly. You guys can go find them. There's been some critiques written about my video on quantum. You can actually just go to our YouTube channel and search for quantum computing, and a couple of videos will pop up, and there should be timestamps in the description. It'll take you to them. To the area, the live stream where I talk about quantum computing. But somebody posted, several someones posted Medium responses critiquing my video, and absolutely valid. I'm not a physicist. I'm not an expert in quantum computing. And they basically said, hey, you're wrong. So I don't really think that it is, because I think that security has the ability to evolve hand in hand with attack. That is the fine balance between attack and defense. But again, I think that we don't know. So I would maybe go read those Medium articles, because they seem to know a little bit more than me. But basically where I come from on it is just from a fundamental perspective of technology in the future is hard to predict, hard to anticipate. You never know what innovation is right around the corner. And we have, again, building a quantum machine is going to be very difficult to break Bitcoin's code. And integrating quantum defense does not seem that hard or far-fetched to me. Not sure if Miley agrees to being funny. She looks like a skinny junkie in her latest video, just the way we like her. So the Bitcoin price is partially based on my broken transmission stress and also the fact that I couldn't find my 4-year-old shoes this morning. Yes, it is, man. That's definitely wrapped up in there somewhere. All right, guys. Hey, I'm going to take a quick break. Yep, that's all I got. We're going to take a quick break. Generally, we'd have a word from our sponsor right here. Let's have a word from our sponsor. I think that's a good idea. So let's slide on over and talk about. Actually, you know what? Not a word from our sponsor. Sorry, that's not the time slot we got open. But let's just talk about Binance US. Why not? If you guys want to support the show, there is a link down in the description for Binance US. I just got my account fiat verified. Took about 3 days. But Binance US, it's Binance in the United States, guys. I don't really have a whole lot of thoughts or opinions on this right now. They did just add some new altcoins to this. I do think that if there's going to be an exchange that has that is going to be the new, people are talking about what's the new hub for altcoins in the United States. I think that if you want to trade liquid coins, I think that if you want to stay away from extremely high, altcoins are probably one of the most high volatility assets. But if you're looking for an exchange to trade on that's legal in the United States, you don't have a lot of options. And Binance does have a track record of providing good liquidity, which is absolutely essential. So if you guys want to trade on Binance US, I'm going to be trading on Binance US. There is a link down in the description. It goes to help the show. You guys make your own decision. And with that being said, I'm going to take a quick break. We'll be right back. Don't go anywhere. When we come back, Forex, economic collapse, on the verge, repo lending, Forex, a little bit more Forex, backed, backed. All right, guys, don't go anywhere. I'll see you in just a minute. Howdy. Hey guys, thanks for holding in for the break, guys. If you're just joining us, make sure to backtrack for the last 1 hour of the video because we talked about Bitcoin's price in such depth. We had a great conversation, talked about a whole lot of stuff, guys. All right, now we're back in the live. You know what, guys? I really want to pull open. All right. 160 of you guys with a peak concurrent of 224. Great show, guys. Very exciting day in the market. But let's take a slight break from all this. If you guys want to know the one substance that I do that does keep me on my toes, it's coffee. A lot of coffee. Now, let's slide through. Let's slide through and talk about dun 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 dun. I got it somewhere. Aha, there it is. Okay. Okay. Hey, I said doo-doo. Elijah, good to see you, man. Much love to you, my brother. Howdy. All you need is a cowboy hat. Hey, I tried to make fun of people with a southern accent once, and I got spammed in the comment section, man. Okay. So we've got some fantastic news to talk about. Let's talk about the news. Let's check out the Forex market for today, and then we'll take user-submitted chart requests. So let's head on over into the scene. Or actually, you know what? Let's head over into the news segment with today's Today in Bitcoin. All right. So the first thing we're going to talk about is Backed. Backed Anonymous, guys. Okay. So the highly anticipated physically settled Bitcoin exchange Backed launched yesterday to what some say is underwhelming demand, to say the slightest. In its first day of operation, Backed says 63 Bitcoin have entered into monthly contracts on the platform worth more than $600,000. Now, while some were predicting an immediate moonshot, we talked about that narrative. We talked about that narrative that we have been given as Bitcoin traders and investors throughout the majority of 2019. Which is that down at $3,000, institutions filled their bags and they accumulated. And now we are at a period of consolidation. We're trying to shake out all the short sellers before we blast off to our new all-time high. This is nothing but a pit stop on the way. We're forming a symmetrical triangle, these people say, and we're going to break to the upside and just carry right along. And as fundamental proof of that, they point to things like Backed. They say that institutions now finally have the ability to take price to the upside, or, institutions now have a better platform to trade on that is physically delivered. This is going to be great for the space. And I've been supportive of Backed as well. And I still am, actually. Now, the fact is that most people were predicting an immediate moonshot on Backed's launch, right? But the truth is, it may take time to gather the interests of institutions. Backed, and we talked about this just slightly earlier in the show. We talked about the fact that with the economic situation is different now than it was 6 months ago. Back 6 months ago, we were coming off the heels of the stock market decline, and individuals felt more confident that this was a dip, and they were much more risk. They were less risk adverse. They were more prone to accumulate Bitcoin. Institutions were more prone to accumulate Bitcoin. We have a different economic situation now, right? And we have to understand that with this repo lending that's going on, institutional investors already are receiving this information in advance. They have an edge in the market. That edge in the market is information and news, right? Retail investors cannot trade the news because we are the last in the line to receive that news. It has already been acted upon, and all we are entering is into a trap. But news can be traded on if you have an edge in receiving that news prior to anybody else acting on it. We often, as retail traders, will never have access to that edge in the market unless you have inside information, which is illegal. Now, the truth is, it may take time to gather the interests of institutions. Now, Backed, and just to cover on the tails of that, we now have a different economic situation where the entire global economy is contracting. There is pretty much mass panic in the streets. People are concerned about the stock market decline. We've had the inversion yield curve flip, and these situations everywhere look pretty dire, especially when you see traders come out. So it's different when politicians and economists and teachers and talking heads talk about stock market declines or price valuations, because they are not accountable, right? Their livelihood does not depend on how accurate their analysis is. All these talking heads on CNBC, any politician who comes out and says the economy is doing great or the economy is doing terrible, none of those people, you can't take their word because their livelihood does not depend on the accuracy of what they say. Traders, on the other hand, individuals like Ray Dalio, who came out and published his paradigm shift. Now what's interesting is that Ray Dalio is a trader. He runs a hedge fund. His livelihood is directly tied to his analysis of the market. So and there's other individuals that have come out as well. So when people like that come out, I tend to listen to the traders whose livelihood is tied to their well-being in the marketplace, to how accurately they can call the market. Don't listen to politicians, listen to traders, because our our bottom dollar is on our analysis, is on how we react to the market. Now, Bakkt, however, is prepared for their arrival, having developed the necessary infrastructure, such as their insured custodial warehouse, something we have not seen before, which is a good solution to the custody issue. And they've overcome many regulatory hurdles. The exchange is positioned to serve institutions' appetite for Bitcoin in the future. It is there. It has gone through all it needs to. Now, according to Three Arrows Capital CEO Su Zhu, regulated futures contracts often get off to a slow start and grow over time. Now we have to contrast this with how the CME futures launched, right? The CME futures are a cash settled futures platform, derivatives platform. It's a cash settled contract, and as such, if we study the history of CME cash settled futures, they often launch with a bang. Physically delivered is very rare. Physically delivered futures are rare. They exist mostly in the commodity space, and still even in the commodity space, cash settled futures are much more common. One of the biggest market manipulations that we know of to date is cash settled futures manipulation of the spot silver price and the future silver price. So this is something that's been well documented. This isn't conspiracy theory, but we have to look at how CME futures launched. The head of the CME, when they launched the Bitcoin futures contract, said, quote, live on air, we will tame Bitcoin's price. It's easy to dump millions and millions and millions of dollars into a cash settled futures contract and take price the other way, because now you are basically opening up cryptocurrency to the same type of market manipulation that the big banks run rampant in the Forex market, in the foreign currency market, because foreign currency has no intrinsic value. It moves whichever way the whales want to take it, up or down. Now, Bitcoin is different in the fact that it actually does have intrinsic value, but it is still slightly subject to many of those same conditions where cryptocurrency is different from Forex, and that the whales cannot just take price wherever they want it to, but they have a greater ease to, right? It's slightly different. It's not as bad as Forex. It's not as good as stocks though, right? Where stocks truly do have intrinsic value tied to valuations of the company. Bitcoin is a little different. It does have intrinsic value, but it is also as a fresh asset, and as it can be taken up or down, it's also tied to that same level of the same style of market manipulation, a different level. But according to Three Arrows Capital CEO Su Zhu, he says, quote, Bakkt will be likely first to trickle and then a flood. The reality is that most regulated futures contracts get low adoption on day one, simply because not all future brokers are ready to clear it. Many people want to wait and see. The tickers are not even populated on risk systems, etc., which is true. It's going to take time for Bakkt as a platform, as a contract to trade on, really spreads itself out and becomes convenient. You really right now just have first adopters that are getting into the space. Now, in an interview with Fortune, the owner of Bakkt, Jeff Sprecher, says the exchange has experienced a flood of curiosity, but not necessarily demand on the launch of their futures platform. He says, quote, it's not demand yet. It's intense curiosity. It's the sense that money managers want to be at the front of this train and not be left out. The day-to-day news covers Bitcoin when the price goes way up or way down, but underneath, we see sophisticated people investing in infrastructure and compliance that's unrelated to the price. But they won't use that infrastructure. There won't be true global acceptance until we can build out the rails in a regulated manner, and that is absolutely true. Now, hopefully you guys saw my kind of funny tweet the other day, or actually it was last night or this morning on Bakkt. I said, hey, Bakkt off to a kind of a weak start. What does it say when I've traded more volume than Bakkt today? But let's just put this in perspective. I do agree with this. It is a new market. We need to give them time to grow. I never thought it was going to be an immediate moonshot. I never once said that. I am supportive of Bakkt's price, and I think that Bakkt, as a physically delivered futures platform, once it gains more adoption, will be one of the best price discovery vehicles for Bitcoin's price. Better, I would argue, than spot Bitcoin exchanges. Why? Comes down to regulation. And I know that's an unpopular word in our sphere, but it is what it is. Bam. All right, so let me know what your guys' thoughts on that is. You can leave them in the comment section down below. You can pop them in the live chat. I'll try to respond. Do you think that Bakkt is a moonshot? Do you think that we will respond positively to this? Do you think the fact that they launched with a very weak response, that all this is nonsense? If they didn't hit it well on day one, they're not going to hit it out of the park eventually, and it's just going to be another lame duck futures platform, regardless of how regulated it is? Or do you think that we just need to give them time to grow so that they can actually get where they need to go? Moving right along from here. And this is really the story of the day, guys. Now, just a week ago, we reported on a liquidity crunch in the repo markets, which required the New York Federal Reserve to step in and provide a repo liquidity program of their own. Now, since then, we've learned each morning since the liquidity scare, the Fed has made available $75 billion of repo offerings and announced on September 20th that it would be opening 3 additional 14-day operations of $30 billion each. Now, that is about $400 billion in a not since 2008 liquidity being extended to relieve this short-term lending market that sees about $1 trillion a day in action. That is about 40% of the entire market, of the entire liquidity. So 40% of this market is being loaned, is being relieved by capital injection from the Fed. Now, with the repo market being described as an important but often overlooked underpinning to the banking system, could this be an indication of impending banking trouble? So to understand this, I didn't really explain this very well when we talked about it last week, but I want to take some time and explain this a little bit better. So this becomes very clear if we actually talk about what we're talking about. So let's do an analogy. So as a retail human being, as a regular human being, most individuals live somewhat paycheck to paycheck. Most individuals in first world countries do not actually have a lot of savings. Now, there are all kinds of opportunities that are going to come along in your day-to-day life where you have the opportunity to make money, or you have an opportunity to buy something that's very valuable at a cheap price. A good example is maybe a friend of yours comes over and they're like, hey man, I really need some cash. I've got this car that's worth $15,000. It's yours for $4,000, but I need the money right now. I need cash in my hand. Here's the title. Things like that happen on a fairly frequent basis most of the time, where it could be something less benign. Like say you go to the store and they have a deal, or you go to Amazon and it's like, hey, you're buying diapers for your kid. Well, if you buy a year's supply right now, you'll get 30% off, right? But you need to buy it in bulk right now. Now, the sad reality is that when those opportunities come along for most humans, they just do not have the capital required. And so there has been a market that is built up to serve this need. And that market is known as loans, as short-term loans. So this is going to come in the form of payday loans. This is going to come in the form of credit cards, and all of those credit extensions, all of those banking solutions that have been built to service that human need of, I need more money